Welcome to ValueVest Daily. In this super high-stakes world of technology, sometimes a company just has to invent its own tools to build the future. And today, we're looking at what might be the single most audacious bet in Tesla's entire history, a project called Terafab. Now, this isn't just another factory. People are calling it Tesla's ultimate cheat code, a strategic moonshot that's designed to fix its biggest weakness and, just maybe, unlock a multi-trillion-dollar future. So, what is this thing, and why is it so incredibly important? Let's dive in. To really get the gravity of this move, you just have to listen to Elon Musk himself. On a recent earnings call, he put it in really stark terms. He said even in a best-case scenario, the global chip supply just isn't going to be enough for Tesla's ambitions. The company was literally on a collision course with what he called a chip wall. So this quote, it isn't just a justification for the project. It's a declaration of absolute necessity. The entire future of self-driving cars and humanoid robots that Tesla envisions, well, it all depends on them smashing right through that wall. So what is Terafab exactly? Well, the best way to think about it is as a Gigafactory for silicon. It was recently announced, it's located in Austin, and it is a massive, vertically integrated semiconductor plant. We're not just talking about assembling parts here. We're talking about controlling the entire, incredibly complex ballet of chip manufacturing from start to finish. I mean, everything. Logic processors, high-speed memory, and the advanced packaging that ties it all together. All of it under one roof, dedicated to feeding the massive computational appetites of Tesla, SpaceX, and xAI. Okay, before we dive into all the deep technical and financial stuff, here's our standard disclaimer. This content is for informational and educational purposes only. It is definitely not financial or tax advice. So please do your own research before you make any investment decisions. So here's how we're going to break this whole story down. First, we'll dig into the huge chip bottleneck that put Tesla's future in jeopardy. Then, we're going to step inside the Terafab solution to see exactly how it's supposed to fix that problem. After that, we'll connect the dots and see how this whole thing unlocks the production of the Cybercab and the Optimus robots. But hey, it's not all sunshine and roses. We'll also take a really hard look at the billion-dollar gamble Tesla is making. And finally, we'll put it all together to figure out the final equation for Tesla's future. All right, let's start with the core problem. See, if you want to build a future that's powered by AI, you need a truly staggering, almost unimaginable number of chips. And right now, Tesla's access to that one critical resource is, frankly, dangerously fragile. And this isn't just some minor supply chain headache, it's an existential threat to its entire robotaxi and robotics roadmap. This slide here really lays out what you could call the four horsemen of the chip apocalypse for Tesla. First, let's talk about geopolitical risk. Get this, over 90% of the world's most advanced chips, we're talking the sub-7 nanometer stuff, they all come from Taiwan. That's a massive single point of failure in a pretty tense part of the world. Second, capacity is just gone. Foundries like TSMC are sold out for years, with tech giants placing these huge, non-cancelable orders. Third, you've got these unpredictable supply disruptions, like the recent helium crisis that sent shockwaves through memory suppliers like Samsung and SK Hynix. See, helium is essential for the manufacturing process, and if you run short, production lines can just grind to a halt. And finally, you've got this intense competition. Tesla is in a bare-knuckle brawl for silicon wafers against every major tech company on the planet. NVIDIA for its AI dominance, Google's Waymo, GM's Cruise, you name it. And just to put the sheer scale of Tesla's future needs into perspective, just look at this number. This is the estimated annual chip requirement for the Optimus robot fleet alone. We are talking about over 200 million chips a year. That is more than 50 times Tesla's current demand from its entire car and robotaxi business combined. There is no external supplier on Earth that can reliably guarantee that kind of volume at a predictable price years from now. The math just doesn't work. This is the chip wall Musk was talking about, right here in stark numerical terms. So, faced with what seems like an insurmountable external problem, Tesla is doing what it's always done. It's turning inward. Terafab is a massive bet on vertical integration. It's a strategic solution designed not just to manage risk, but to turn a crippling weakness into what could be an unassailable competitive advantage. Okay, let's break down the tech here, because this is truly bleeding-edge stuff. First, you've got 2 nanometer EUV lithography. EUV, that stands for extreme ultraviolet light. Now, why is this a game changer? Well, Think about it. Light has a wavelength, and you physically cannot print a feature that is smaller than the wavelength of the light you're using. UV light has a much, much shorter wavelength than traditional methods, and that allows Terafab to etch transistors that are literally smaller than most viruses. This is the key to creating incredibly dense, powerful, and efficient logic chips. Second, they're bringing high bandwidth memory, or HBM production, in-house. Imagine this as giving the chip's brain a multi-lane superhighway directly to its memory, which gets rid of all the traffic jams and bottlenecks that slow down AI calculations. And third, advanced packaging. This is the final, crucial step that brings the logic and the memory together into a single, highly optimized, and incredibly efficient unit. The big takeaway here is that this isn't just about making one part of the chip. It's about controlling the entire stack, from sand to the finished product. And here's the payoff. The first product planned for Terafab is Tesla's next-gen A15 AI chip. And the numbers? Well, they speak for themselves. We're talking a staggering 40 to 50 times more compute power and 9 times more memory than its predecessor. Now, this is the kind of horsepower you need for true, unsupervised, full self-driving and for the complex, real-time decision-making of a humanoid robot trying to navigate our world. A chip this advanced, you can't just buy it off the shelf. It has to be designed hand in hand with the factory that's going to build it. But look, this technological leap isn't just about impressive specs on a slide. It is the key that unlocks the mass production runway for what could be Tesla's two most valuable future products, the Cybercab and the Optimus robot. The first major unlock is cost. This chart shows the basic economic advantage. Right now, when you buy chips from an external foundry like TSMC, you're also paying for their massive profit margins. By bringing production in-house, Tesla is aiming to systematically slash that per-unit cost. We saw this exact same playbook with batteries in the Gigafactories, where they basically rewrote the cost curve for electric cars. Terafab is designed to do the exact same thing for the AI brain, which is the single most valuable component of these future products. And the potential impact on profitability? It's astronomical. Today, Tesla has respectable car gross margins, hovering around 25%. But with ultra-low-cost in-house chips powering high-value services like a robotaxi network or robot labor, the projected margins could just explode to 60, 70, or maybe even over 80%. This would completely transform the entire financial profile of the company, shifting it from just a hardware manufacturer to a high-margin AI and software powerhouse. So this timeline here lays out the critical path. The project just launched, so the initial ramp-up of chips is expected within the next couple of years. This directly feeds into the plan for mass scaling of Cybercab and Optimus fleets in the second half of the decade. Without Terafab, this entire timeline would be at the mercy of external suppliers and whatever they decide to charge. With Terafab, Tesla controls its own destiny. Okay, but for this to be a credible analysis, we have to ground ourselves in reality. As revolutionary as all this sounds, Terafab is an absolutely colossal gamble. It's a moonshot with a whole host of risks that could derail the entire project. So let's take a hard look at the skeptics' view, because these are all incredibly valid points. First, you've got this massive experience gap. I mean, let's be blunt. Tesla has zero prior experience in chip fabrication. Zero. They're starting from scratch in a field that's dominated by giants like Intel and TSMC, companies with decades of institutional knowledge built on countless failures and breakthroughs. Second, the sheer complexity is just mind-boggling. A 2-nanometer fab is one of the most difficult and capital-intensive engineering projects on the planet. You need clean rooms that are thousands of times cleaner than a surgical operating room, where a single speck of dust can ruin millions of dollars of product. And the cost? The capital expenditure is staggering. Estimates range from $20 billion to over $100 billion. That's more than a modern aircraft carrier. And this isn't going to happen overnight. A full production ramp where you get high yields and most of the chips are usable could take 5 to 10 years of painful, expensive learning. All of this adds up to an execution risk that is, frankly, off the charts. The history of technology is just littered with the ghosts of well-funded companies that have failed at this exact challenge. So, how do we process all of this? How do we balance the immense potential against these staggering risks? Well, it all comes down to the final equation. Is Tesla building a factory? Or is it building the foundation for a whole new kind of company? This is really the question that should be on every investor's mind. If Terafab fails, it's a multi-billion-dollar write-down and a major, major setback. But if it succeeds, even partially, it removes the single biggest bottleneck to mass-producing autonomous robots and vehicles. It would create a durable cost advantage and a competitive moat that rivals might find literally impossible to cross.
This could be the final critical move that solidifies Tesla's transformation from a car company into a dominant, vertically integrated AI hardware powerhouse for the 21st century. So what do you think? Is this a bet worth taking? Let us know your thoughts down in the comments below. Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And one more thing, please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities.